Nikola was just issued another subpoena. This is their fourth one in their first year becoming a publicly traded company. Definitely not a good look for the stock, especially with Trevor Milton selling out of even more of his shares and their entire executive team getting $560 million worth of stock bonuses. Let's talk about it. Hi y'all, my name is Greg and I make videos about the stock market and options trading. Today, we're going to be talking about Nikola stock, ticker NKLA, and the recent subpoena. Then we're going to talk about another one of their partners cutting ties with the company. And finally, at the end of this video, we're going to talk about the shady that's going on behind management doors, with the management team getting paid $560 million in stock bonuses. But before we get into it, if you like this sort of video where I deep dive into these different stocks and provide you with actually useful information, make sure to leave a like down below and subscribe if you're new to the channel. With that out of the way, let's talk about the subpoenas. Their first subpoena was issued on September 14th after the Hindenburg report came out, which absolutely obliterated their chance of ever gaining trust from their investors because they basically admitted to all the lies that were outlined in that short report. They had three subpoenas that followed that, one directed at ex-com and Trevor Milton, one at CFO Ken Brady, and then a grand jury subpoena issued on September 21st. That last subpoena issued by the district attorney's office has been deferred but not denounced, so this means that it's still outstanding, but they're going to be working on it at a later time. Maybe the district attorney's office is too busy right now to deal with this case, I have no idea. But a little over a couple months ago, Nikola was issued another subpoena, and this time it was related to their projected 2021 cash flow and their future use of capital raises. Now I want to make it clear that this subpoena doesn't mean they're guilty of anything, since in the court of law you're innocent until proven otherwise, but their share offering and their use of this and their projected 2021 cash flow was enough to raise some red flags over at the SEC in order for them to start an investigation. In case you missed it in my last video, Nikola was proposing to sell up to $100 million in new stocks back on March 15th for general corporate purposes, helping to build out their Arizona factory and scaling the production of their trucks. I'm not exactly sure why the SEC has to investigate into these uses. Maybe general corporate purposes was a little bit too vague for them and they need more details on this, but I've got a strong feeling on what those general corporate purposes are. We'll talk about that later in the video. For now, let's talk about another one of their partners that they potentially just lost. They've already been on a losing streak with GM dropping out of their original deal, Bosch selling just under the 5% reporting requirement, and now Hanwha is dropping their stake in Nikola as well. According to Nikola, Hanwha is a world leader in renewable energy and solar panel manufacturing, and their collaboration would have allowed Nikola to convert solar power to renewable hydrogen. Sounds great, right? Well, Hanwha invested a good chunk of money into Nikola back in September of 2019, but just a couple months ago, they announced their plan to reduce their stake by half. According to the recent SC13DA filing required by any company with over 5% ownership, Hanwha plans to sell up to 11 million shares worth of Nikola stock. They expect this deal to be finalized by December 10th of 2021, so over the next 7 months, Hanwha is going to be bleeding out Nikola shares, creating even more selling pressure than they're already experiencing. If that wasn't bad enough already, this is going to put them under the 5% reporting requirement. Right now they own 22.1 million shares, representing 5.6% of the company, and if they end up selling all 11 million shares, this would mean they would own less than 3% of the company, and they would no longer be required to disclose their trades. Supposedly, this decision won't affect their strategic partnership. According to Nikola, Hanwha continues to have confidence in Nikola's vision and maintains a significant position in Nikola shares. Well, for now, but not for long, because they're going to be under the 5% reporting requirement, and I wonder what's going to happen once they reach that 5% requirement. Are they going to end up selling the rest of their shares? I guess we'll have to wait and find out. What we do know now is that there's one person that's very keen on selling his shares, and that's none other than our ex-com Trevor Milton. As of lately, he's been a little bit more tamed, only selling 20,000 shares on May 13th, and he actually wasn't selling shares for a few weeks. But, I mean, can you really blame him with Nikola stock being down as much as it is lately? Despite this though, he's still making plenty of money. In one of my previous videos, I calculated that he had made $60 million by selling shares since December, and that was as of February 25th when he had 83 million shares left. Since then, he sold 4 million more shares worth $57 million. So all in all, Trevor Milton has cashed out of $117 million worth of shares since December without really having to do anything. He doesn't even work for the company anymore, and he's made over $100 million. But he's not the only one that's getting away with this, and that $117 million figure is only from December. Luckily for us, Nikola gave us the details on their executive pay, and it's not exactly a pretty picture. If you remember from my first video on Nikola, I commented on Trevor's tweet saying that his executive team agreed to take $1 per year salary with stock bonus. This means that their pay, except for $1, entirely relies on the stock's performance, and you would think with the stock's performance ever since I made that video back in June of 2020, they wouldn't be making a whole lot of money, but you'd be wrong. In total for 2020, Nikola paid out their executives $566 million in stock bonuses. Ex-con Trevor Milton himself was paid $159 million in stock bonuses, right on par with CEO Mark Russell. CFO Kim Brady had made $85 million in stock bonuses, and their energy and commercial president made $31.5 million. He was the lowest earner. Their chief legal officer brought in $79.5 million in stock bonuses, and finally their chief of human resources made $53 million. So each of them was paid a pretty penny in stock bonuses, $30 million or more. It's absolutely mind-blowing how much they paid out their executive team for a company that's making zero sales right now. In the meantime, they're diluting the shit out of their shareholders who are already hurting based on the downward price action the stock has seen over the last year. But hey, that's just my take on this whole mess. What do you think of the executive team getting over $500 million in stock bonuses? Do you think the new subpoena will finally do this company in? Comment down below, and before I go, I want to say thank you to all my patrons for the support. I really appreciate it. And if you want to join my Patreon for live trade alerts, one-on-one consulting, and so much more, make sure to check it out down in the pinned comment below. Thanks for making it all the way to the end of this video, and as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.